You have only 1 minute to decide to enter a trade or not. I scalped for 7 days with only EMA 20 and 10 on a 1-minute time frame. Look what happened to my account. Let's go to the live chart together, see exactly where I entered, why I entered, how I used price action, and how much profit or loss I made in the end. If you're looking for real scalping, this video is for you. EMA stands for exponential moving average, a tool that shows the average price, but gives more weight to recent prices. This makes it react to price changes faster than SMA, simple moving average. Now I've chosen 2 EMAs. EMA 10, short term, for faster reaction, EMA 20, medium term, for detecting the overall trend. On a 1-minute time frame, if you enter a trade only with the cross of these two, you'll definitely get lost, because the market is noisy and there are a lot of false signals. This is where price action comes in. Well, to move on, my combination before that was to enter with EMA crosses as the initial signal, but enter only when there is price action confirmation, like an engulfing candle, a true pullback, a support or resistance level break. Day 1, trending market and confident entry. Well, my first day of practice started with a relatively bullish and low volatility market, the best conditions for testing the strategy. I opened the chart, 1-minute time frame, EUR/USD currency pair, and soon saw a good situation. EMA 10 was crossing EMA 20 from below. EMA 20 was sloping up, meaning it wasn't just a cross, it was also an uptrend. But I didn't enter yet. I waited to see if the price would respect this cross or not. After about 3 candles, a strong bullish candle came in that had a lower low but closed on high volume, a clear engulfing candle. I entered right there, on low volume because it was my first trade, and I didn't want to get too excited. I placed my stop below that candle. I placed my target a few pips higher, near the previous resistance. And less than 3 minutes later, the target was hit. This first day experience showed me that just crossing the EMA is not enough. But if you wait for the price to react and confirm the price action, you can enter calmly even on M1. Day 2, range market and fake signals. The second day was a completely different story. When I opened the chart, I noticed that the market had entered a range mode, neither a clear trend up nor down. It was just stuck between 2 levels. The 10 and 20 EMAs were crossing each other, but when you looked closely, you could see that the price had no direction at all, exactly where the EMAs give the most false signals. But because I was still in the mood for the first day's success, I made a big mistake. I entered the trade on the first upward cross, without patience and without candlestick confirmation. I didn't even check if the price was breaking the previous resistance. I entered just because the EMAs crossed. Result? A strong reversal candle came, and my stop was hit very quickly. I lost a small amount, but more than the money, my mind was messed up. After that loss, I took a deep breath and decided to follow my rules more seriously. I said to myself, from now on, if the price action doesn't confirm, even if the EMAs dance together, I won't enter. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Day 3, 4, and 5. Peak EMA price action consistency. During these 3 days, the market was exactly what a scalper loves. Trending, with predictable swings and clear price action. On the 3rd day, a strong downtrend was formed. The 10 EMA broke the 20 EMA with a steep slope from above, and any pullback that hit these 2 lines was a great selling opportunity. I entered on one of these pullbacks, confirming the engulfing candlestick, and took a good profit by keeping the stop below the ceiling. On the 4th day, the conditions were similar, but the trend was up. What was interesting was that I didn't just look at the EMA. For example, somewhere a doji candlestick appeared right between the EMAs. I rejected it. But then I entered when the previous candlestick broke the ceiling and the bullish cross broke. I quickly hit the target. Day 5 was less volatile, but I only had one good opportunity when I entered with a combination of resistance break plus bullish cross. Result? 6 trades in 3 days, 5 winners, 1 loser. All because of the combination of EMA plus price action. Day 6, excitement, the enemy of scalping. Day 6 was one of the worst days of the week, not from the market's perspective, but from my perspective. Because I still had the feeling of success from the previous days in my mind, and this sparked one mistake after another. When the chart opened, the market was neither trending nor very volatile, a semi-trending, semi-range situation. The EMAs made a false cross, and I impatiently entered the trade, without price action confirmation, without checking the conditions. I took my first loss. But instead of stopping, I was tempted to try again. I entered again without logic. This time, my loss was even greater. The third time, the price didn't let me move at all, and with a quick spike, my stop was triggered. In less than half an hour, 3 losses in a row. The point is that my strategy was the same. The market was the same as the previous days, but what went wrong was my decision-making. Excitement without logic is the biggest enemy of a scalper. After that, I sat down, reviewed all my trades, and realized that if I had only waited for the candlestick confirmation, maybe none of those losses would have happened. A day of financial losses and even more of a mental loss. Day 7, a perfect example of correct strategy execution. The last day of practice was where everything stuck with me, not because the market was great, but because I had better control. In the morning, the market started to move up. The 10 EMA started to approach the 20 EMA, but I didn't rush. I waited for the full cross to happen, then looked for the candlestick confirmation. About 5 candles later, a strong bullish candle with a short lower shadow formed. The next candle engulfed it completely. At the same time, the price also broke the minor resistance level. My entry was exactly at the same time as the price action broke and confirmed it. Stop under the engulf candle, target at the next round level. In less than 2 minutes, the target was hit. To be sure, I only took the same trade until the end of the day. Although it crossed 2 more times, I did not enter because the price action did not confirm. Day 7 showed that when you wait, just looking for a golden opportunity, you can both profit and keep your mind at ease. In fact, this was my best trade of the week. Not only because of the profit, but because it was perfectly aligned with the strategy. Practical suggestions. Always get confirmation of candlesticks or level breaks. If the EMA is crossed but the price is neutral, don't enter. On the M1 time frame, the timing of entry and exit is very important. Candles change quickly. Before you start, draw a range to identify a range or trend. Be sure to consider the spread and platform delay. If you like this 7-day workout and it was useful to you, I would be grateful if you would like the video. If you haven't subscribed yet, subscribe now and hit the bell so you don't miss the next test videos. By the way, write in the comments, have you ever scalped with the EMA yourself?